Morning, everyone. Darren at Leviathan here, talking to you from the CME trading floor for your opening news and other things. Peace breaking out in the Middle East again, maybe. Who knows? Uh, but um, you're coming in. You're going to see crude here down $3.70, giving up most of yesterday's gains, and conversely, fixed income rallying a bit. We've got 10-year now trading at 110 the figure, which is kind of like where we were two sessions ago, trading near the highs or at the highs as we speak. Same here in the euro dollar space. We've just gone bid up to the highs of the day as where it's trading. And specifically, if you look at DEES, we are coming down in hike expectations. Currently 82% by year end. So basically, yeah, there's that. So it is basically whether or not we get a deal, as Trump has been putting out on Iran over the weekend, maybe, is what he was intimating too, which would be great to coincide with the start of the World Cup and hopefully take everyone's mind off of what a mess this has been. So, having said that, uh, we're going to look at a couple of hike trades for the short term, just to see what they look like. I think there's a couple of decent trades to do there. We've been talking about in the last couple of days. But just briefly going back over news, uh, expect basically people are going to be positioning themselves for the non-farm payroll number out tomorrow, which is expected to be a gain of 85,000 people. So you're going to expect pieces to be moved around the board today. I don't expect too much. I mean, your stock market's coming in slightly low, but nothing too much, and that's basically on the back of poor numbers here by Broadcom that rallied up quite aggressively to the 470, 480 area. We were looking at that, looked at a couple of downside trades there, which obviously would do okay. Now, the one that I picked out, I think monetized fairly well. We can look at that shortly. But yeah, basically run by geopolitical news yet again as the main driver for the markets as we head into the summer. We do have some Fed speakers today, so that might be interesting to see which way they are leaning. Specifically, let's look who we actually have coming up today. One second, bear with me. So we've got Barkin, I believe, has already spoken, but we've got Michelle Bowman and Kansas City Chief Jeff Schmidt at 12 p.m. Bowman speaking at 9 a.m. this Central Times. So I'd be interested to see what their take on everything is and whether or not the effect of whatever is even the result of the peace agreement, whether or not that's still going to remain as an inflationary item to look at on the agenda. So with that, the two trades that we wanted to look at for short-term interest rate plays for potential of one hike or more. And so on a, we can send you these out on by request. But one of the trades I did like was this one here in December, the 95, 75, 95, 87.5, 96 even put fly. That covers you down quite a bit. You can buy this for around a tick. It's still relatively cheap compared to where it has been in the past. You can see here, this is a price of an equidistant out the money put fly. So it's in this 15th percentile. If you can get it for this price, it's a good buy. I just like it. It may not monetize as quickly as you want. You know, you'll still make money on a down move. You're really going to start kicking in though closer to time to expiration for year end. But you know, all you need to have is that implicated price there, and any down move from here would be a good place to get in. So yeah, I kind of like that trade, and it is worth participating in that for a tick. Let's have a look if we've got. We can have a look at the ratio fly I was looking at in Broadcom and see where that is worth now. Yeah, we had one that was targeting 369, and I like this ratio fly here. We thought it monetized pretty well, and at the moment you'd have seen a, so basically you would be getting in this ratio fly here, 2 by 6 by 5, 1 by 3 by 2.5. You have to obviously use a common denominator to be able to execute the trade. But as we can see here, if I adjust the underlying to where we currently are trading, so you'd have got this in at a mere 30 cents. Things now worth over $1. So, and that is without changing volatilities at all, which I imagine will probably come off post number. Yeah, this is actually, this one worked out pretty well. So even if you held on to it on short term, you've more than doubled your money. And as I said, we are trying to keep you in the game. That is the idea. Trades that will keep you active and that you won't lose all your money on. That is the main object of this exercise. Anyway, we will revisit some of these other downside trades later on, and feel free to DM me, and please visit our site and have a look. See if you there's stuff there that you have useful. There are institutional tools that you cannot find anywhere else, and certainly not available to you. We're the only ones that provide it. This is not your straightforward, what is this trade going to look like on expiration, because we'd be able to run through the cycle and see how it goes from now all the way through to the end and what happens in between, which is the important part. But anyway, as I say, always better to be lucky than good. So better luck trading, and have a great day.